Hey, what is up, dudes and dudettes? It's Diligence here. And lo and behold, today I finally got time to make a MMTLP video. Yes, we're gonna talk about the Divi share holder, or if you call that, basically it's a preferred A share that were traded actually on the OTC market that people are really confused about, and it sort of skyrocketed over the past few days, and there's some controversy surrounding it. So in this video, I'm just gonna talk about the basics of what it really is. You know, what really happened to your old shareholder shares that are functioning as a Divi shareholder. And there's going to be part 2 and part 3 to this video. Part 2, I'm going to react to, I think Uncle Smokey emailed the IR, and the IR has some response. But interestingly, because it's a preferred stock trading on the OTC, the IR actually don't have legal liability if they said anything wrong. So in terms of how this legality is going to go, I'm just going to base my information from a lot of the CPA, CFA, and FINRA certified member that I have in my contact. I did some interview with them. I asked them some questions about it. And then a lot of those factual informations are driven from the internet, driven from what I heard from them, and also from my experience dealing with over-the-counter market, which is OTC market, and my experience dealing with preferred share in terms of on the open market. And as you guys all know, that preferred shares are actually not frequently traded on the open market, especially on the NASDAQ, especially on NYSE, especially on a lot of the major stock exchanges. There are reasons for that, and we're gonna go over that. Maybe not in this video, maybe in the next video, because those are a little bit more intricate, and those are a little bit more complicated to explain, because those are some in-depth business terminologies are going to be in there, including liquidation preferences, participating liquidation, and also stuff like, the nature of a financial instrument. For example, is the nature of the financial instrument a debt, or the nature of the financial instrument is an equity, or it's a hybrid security, which is like MMAT/LP. And because there are a lot of people trading on it, then it becomes a derivative. But then, if it's a derivative, then it has to be pegged to a financial instrument. So what's the main financial instrument, right? Who actually issued those? So in this video, we're gonna tackle what is MMTLP, and what really happened to MMATA, which is, previously was known by that, right? And what is really the meaning behind it? And as a shareholder, what does it mean for a retail shareholder to hold that? What is basically the benefit of holding that, and what are some downsides or pros and cons of holding it, and what really means to hold it, really? So let's get into it. So what is the MMTLP, right? It is basically formally known as MMAT-A, which is a preferred shares that Torch issued at the end of its merger with Metamaterials, okay? And the preferred shares also have a binding functionality, which is each share of preferred MMAT-A will give you 1 share of dividend payout if Torch eventually liquidated its remaining oil asset by December 31st, 2022. Okay, there are a lot of conditions here, okay? So basically, MMTLP is equivalent of MMAT-A, which is the preferred share that, Torch issued for the special dividend deal around June 25th, okay? And those special dividends are pegged to preferred shares, okay? So everybody receives these, MMTLP basically are entitled to the dividend to be issued by Torchlight, or right now, we're known as MMAT, which is Metamaterial, right? And all of you, and those shares are issued around June 24th, and all of us who hold those special dividend shares receive those placeholder around mid-July. And depending on what brokerages you have, you might receive it mid-July, late July, early July, really depending on what kind of brokerages firm you have. And they're generally untradeable except for a few brokerages. For example, TD Ameritrade allows you to trade some of them like when you receive them, and Robinhood does not allow you to trade them. They've been a $0 basically dividend placeholder all the way until December 1st until recently, which is about 2 days ago. Robinhood let you trade them for briefly for a day, but then due to volatility and liquidity issues and due to the legality of offering OTC shares or OTC tradabilities on Robinhood is sort of creating a legal problem. This is why they halted it and they stopped trading it. And my suspicion for that is because a lot of people are trading it. It sort of like repeats the GME sort of situation back in on early February about 2021. But the legality and then the core problem here is not the same as GME. The reason why GME were halted or AMC were halted is because there are a lot of trading volumes. But for this one is because, well, let's get into that later on in this video. It's a fairly complex nature to explain. Because if you're gonna go ask IR of metamaterials like what really is going on, the IR response is gonna be very simple. It's like, okay, our company have nothing to do with the preferred shares, which is ironic because technically, this special dividend deal is a part of the metamaterial merger deal with Torchlight. And therefore, all of these, special dividend holders like us are technically metamaterial holders. So technically, metamaterial cannot make MMTLP tradable unless GP actually agrees to make a deal with the market maker. Okay. So first, let's answer this question. Why are they generally not tradable at first? Well, normally you don't really see preferred shares on NASDAQ traded, right? Yep, because the NASDAQ exchange is really heavily regulated under FINRA body. So it's extremely rare for a company to trade its preferred share on the open market. Why? Because common stocks you can trade on the open market is because common stocks are regulated by actually state and federal rules, right? Basically, you can determine the terms of your common stock. For example, I started, I'm an Apple that trade my common stock at like 130 per share. And then, my terms and agreement of my common stock cannot supersede the state and the federal legislation. Okay. It cannot supersede that. That means it's basically governed and regulated by the general SEC and FINRA body the regulatory whatever agreement that FINRA have, like whatever law that FINRA posted. But preferred shares are different. Preferred shares are more like a custom security that a company can issue. So basically, me as a company can determine what terms and agreements I decided to put on preferred shares. Therefore, all these preferred shares are a hybrid security that sort of have the legality or the nature of a debt security and also an equity security. I'm gonna explain that in the next video, like what really mean to have and liquidation preferences of a debt security and liquidation preferences of equity security. Basically, if you're a company and you own debt, when the company go bankrupt, you have to pay your debt first, and then preferred shares, and then your common stock shareholders. So that's like in short, right? And basically, most companies won't give out dividend placeholders because it's actually a very problematic practice in general in finance, due to a lot of liquidation preference problems that I just stated before, right? Which we will not discuss in this video. And why it's problematic is because let's just say I decided to issue, 1,000 shares of preferred shares on the open market. Nobody really knows how much these preferred shares are actually worth, because until me and a market maker sort of have our first agreement, and the market maker has to sort of collateralize this security by providing some collateral to basically be the house of this security. So basically, whoever decided to sell MMTLP on the OTC market actually have to go through a series of processes of, say, providing $5 million as a hedging instrument. So then, by the end of the day, somebody has to sort of like become the guarantor or the guarantor of this security. And what is problematic is basically whoever issued these preferred shares, for example, right now these preferred shares are actually not logged on MetaMaterial's balance sheet, so it's actually logged onto a third-party balance sheet that's basically formed by GP. That's basically a third party, and you have no idea because the third party is a private company, so they determine the terms and services or terms and agreement of all of these preferred shares, which means if tomorrow they decide to go bankrupt, they can just not pay you anything, or all of your MMTLP shares will become zero, if that makes sense. So why are a few brokerages decide to trade those divvy shares or preferred shares, but the others decided not to? Well, due to the long lead time and the whole transferring share from CSE to NASDAQ, remember the late June that MetaMaterial decided to transfer from the CSE to NASDAQ, and then later on they decided to dual list. MMAT basically outsourced its transfer duty to a financial firm. In this case, I think it's called ASF or ATF or something like that. And this firm can decide how those divvy shares are structured and transferred to the end users or end holders, which are us, okay? And it just happened that they chose the route where the brokers would have more control over the marketability of these dividend shares than the end holders. And because it's not technically an IPO-related stock option, the shareholders actually do not hold any voting rights, okay? Because these are not common shares, we as shareholders do not have any voting rights by holding these preferred shares. Or if you want me to put that sentence in simpler terms, basically preferred shareholders simply do not have any voting power. So GP and MMAT can do whatever they want with those preferred shares. And maybe tomorrow they can just come out and say, hey, like, sorry, we're not selling our asset, and all of those preferred shares are just going to be equal to $0. Or they can come on and say, hey, we decided to do a spin-off, and 1 share of preferred will become 1 share of these spin-off shares, okay? That could happen too. Or, we're going to stick to our original agreement that came out with the merger agreement, that if MMAT decided, or the old Torchlight assets weren't liquidated, basically that means nobody decided to buy them, or they decided not to sell them, or they didn't sell them in time before Christmas time, then all of your dividend placeholder will become 0. Well, basically, they are not going to pay you any dividend cash, okay? This is basically on the bylaws of the merger agreement. So then the question becomes, how did MMAT-A, the preferred share, which is now namely MMTLP, becomes a generally traded derivative on the OTC market, now namely MMTLP, right? First off, you have to understand how OTC works. So it's basically an exchange, which is called the over-the-counter exchange, that is very lenient and designed for microcap stocks. And the street name for microcap stocks is basically penny stocks, okay? Remember Wolf of Wall Street, the very cool guy that everybody want to be, my boy Jordan Belfort? Yeah, we're really playing in his territories right now, okay? If we're trading OTC stocks, and it basically means we're trading penny stocks. And what do we know about penny stocks or pink sheet stocks? Well, first of all, in order to be listed, the requirements are like 10% of that of any major exchanges. It kind of makes sense, right? Because micro caps won't have a lot of finances to show the shareholders. So even though CSE, SEC, and FINRA still regulate OTC markets, but there aren't many things they can do to really protect the shareholders or to protect investors. Because let's just be honest, if you're a penny stock, you don't really make that much money, or you're not even profitable, you don't have, a GAAP regulated, financial statements, so nobody can really know if you're telling the truth on your finances or not. And due to the lack of financial transparency within and in between OTC and the quoted companies, there are a lot of undetected fraud that goes on with the OTC market. So why is the structure of the OTC market really related to MMTLP? Well, let me explain, right? Well, first of all, I think this video is already going too long. I mean, there are a lot of information that I need to cover. So there will be a part 2 or even part 3 of this video, maybe a part 4, okay? So that you guys don't get bored. And I believe that my videos, this series is gonna be like the most complete explanation on this issue. So why does OTC actually matters for MMTLP? Well, first of all, in order to be listed on NASDAQ, you have to, in order for your preferred share to be listed on NASDAQ, there are 4 rules, okay? I'm gonna cover, this is the last thing I'm gonna cover in this video. I'm gonna pull up the Discord real quick. So guys, on Discord's main chat, I posted this. It's called Initial Listing Requirement for Preferred Shares and Secondary Class of Common Stocks on the NASDAQ. And in order to be listed on NASDAQ, you have to, basically all of these preferred shares has to be unrestricted. Means it has to be publicly held shares and can be publicly traded. But the problem with MMTLP is it's not really an unrestricted stock. Because if you are a shareholder on Robinhood, you're actually restricted to whether you can buy or sell those shares. But if you're on TD Ameritrade, you can freely buy and sell those shares. The whole point of it, the NASDAQ exchange, is to provide liquidity for shareholders. So whenever they decide to liquidate their preferred stocks, you will have a stream of people who already been trading those stocks before you. This is why you can trade preferred shares on the NASDAQ. And usually all of those preferred shares will have a market value of at least $4 million. And that $4 million is actually going to be discounted because when you're liquidating your preferred shares, you're literally sending out a rumor to the market that, hey, I want cash, instead of a blank promise that, maybe I get a dividend payout in, 3 months. Or some preferred shares give you liquidation preferences that will make you entitled to X amount of shares, or X amount of shares convertible to common stock, or X amount of cash payment by the end of a end date, or basically a callable security. Basically means right now, let's say you hold the preferred stock, but in 5 years, let's just say the preferred stock gave you the right to sell 1 share of a security at $50, but right now it's around like $24 or something along those lines. And the minimum bid price of these NASDAQ listed preferred stock will be $4 per share. So basically, the underlying logic here is whoever decides to break the deal, or whoever decided to be the market maker to sell these or to trade these MMTLP stocks, they realize that the initial listing price is not going to be $4 per share. Why? Because when they go back and look at metamaterials preferred stock liability that's packed towards special dividend, they will realize that on a per share basis, they can only start trading around about 10 cents, which makes sense, which is basically the starting price of this, the MMTLP. They started at 10 cents basically, and then now it's traded at $2. And if you apply that logic, if NASDAQ's minimum bidding price is at $4 per share, and then right now the OTC thing is traded at $2 per share, you can form your own understanding of where this stock is going to go to, and whether it's going to have a cap on top of, like, how much is it really going to worth by the end of, I don't know, December or whatever. You say, a lot of people on Reddit, a lot of people on StockWits are saying it's going to worth $12, $35, $6. I mean, think again, all of these information are here. Read this. Like, read whatever I have on the screen and determine for yourself how much this thing is going to worth. And again, I talked about in my previous MMTLP video that the reason why it's traded so high is because A, the novelty of it, and B, the restricted nature of it created sort of like a close supply and demand sort of situation. Because on Robinhood, before, you can only sell, you cannot buy, which make the security scarce. But right now, when Robinhood halted the entire trading process of this, then that just means all of these shareholders are locked, right? And then the other shareholders can freely trade those. Then that means in a short-term period of time, the price will actually stabilize, because you will not have new liquidity coming in or out, because the portion of the shareholders who own MMTLP on Robinhood, those shares are locked, right? That means when you're buying or selling, you're buying or selling the remaining share. A lot of people will say, oh my god, the remaining share is going to skyrocket. But think about it. Who are buying those dividend holders or basically when you buy them, you are when you're holding them, which means that when you're holding them to the end of December, that just means you're entitled. When you hold one share of this preferred stock, you're entitled to one share of dividend payout. When you sell them, that means you're no longer entitled to the dividend payout. So for you, the math is simple, right? You just need to figure out whether, you're by the end of December, you're either gonna get, right now it's traded at $2 per share, right? Are you gonna get more than $2 of dividend payout? If you think you're gonna get more than $2 of dividend payout, simple, just hold it. If you think you're not gonna get more than $2 of dividend paid out, you might as well just liquidate. Because think about it, you still have 3 months to hold them. And then when you're holding something that's flat, or let's just say the price doesn't fluctuate that much anymore, it's like $2 to $3 and that's it. And that means if let's say you have 1,000 share of that and you can liquidate right now, you can actually put that money back into MMAT, and MMAT's daily price movement might even make you more money, or you just put into, options, or you put into shorting the market or longing the market, right? You have to figure out the risk of you holding them, and then compare it to the opportunity cost of where you can liquidate those cash from those preferred shares and you can invest somewhere else. Maybe it will grant you more money. Does that make sense? I hope it does. And this is it for this video, and hopefully you guys love it. If you like those kind of content, smash a like button. If you want more and more people to understand throughoutly what is this really about, you should share this video with the people you care about. And maybe share it on StockWiz or whatever, right? I mean, a lot of haters are gonna say I'm wrong, but I mean, I work in the industry. I've been trading for longer than any of the other channels. And I literally went interviewed people who are literally people who are market makers, who've been trading in different markets, and who's been sort of like, they've been trading for over 20 years and they understand the regulatory stuff that surrounding the preferred stock stuff on the OTC market and on NASDAQ. All right, see you guys on the upside.